Welcome back everyone to another stock review on the Russell 2000. Today we'll be looking at the Insmed Incorporated. I hope I pronounced it correctly, but the US ticker is INSM. So without further ado, let's get right into it. So over here, you can actually observe a pretty cool uptrend, right? So it actually has been consolidating for years, and only recently from the 2024 it starts to surge, showing a 5x of growth in these stocks. Let's look at the weekly chart to slightly see. Okay, so during its startup, it actually dropped actually 96%, and then just consolidating, and until recent years, which is previously 2024, it starts to surge back, have not touched the previous high yet. It's just that still this company reaction is just superb. And let's look at the fundamentals. So over here we have the Insmed revenue, and we can actually see the revenue itself is actually in a very strong growing trend. So it's a very high predictability with increasing sales. So it's actually indicating the business model is actually generating more money from what they are doing. And it's just that previously, from 2010, the revenue itself is just almost none, and only for the reason 2019 it starts to show. But however, throughout all the quarters, it's just that the revenue is increasing very significantly. However, for the net income, the net income itself is actually in a reverse side, whereby it's in a negative trend, and actually the net income is just continuous losing money. So it is actually predictable, but then it's not profitable because of every time their net income is negative form, so their accumulation loss will become greater and greater, and especially if they are a high debt company, so meaning that they will actually be hurt when the interest rate actually hikes up. So this is one of the concerns for this company. And as for the free cash flow, it is also in a very negative form. So the net income itself is actually a very negative form due to the fact that we actually have accumulated loss due to a very decreasing and heavily negative in terms of their net income. So let's look at what they actually do. From the fact that the company actually keep losing money, indicating the company does not generate a lot of cash, especially we can observe from the free cash flow amount. And for what they do is actually they have lead product of REK's, is a company only commercialized drug so far. So what they do is actually commercializing therapies for serious and rare disease. So specifically in pulmonary, which is our lung organ, and rare genetic conditions. So they also have pipeline future income potentials. And as for their stream of income, they have the product sales, which is the drugs that they deal with very rare diseases. They have future of brensocatib, if approved, could be a multi-billion-dollar opportunity since bronchitis has a. So they have this future plan whereby the brensocatib, so if approved, it could be a multi-billion-dollar opportunity since bronchitis has a larger patient populations. And they also have TPIP, could open revenue streams in pulmonary hypertensions. And they also have the partnerships, licensing deals, which may bring a lot of payments and royalties. So the strength for this company is actually a first mover advantage in rare disease market. So the lungs, pulmonary drugs, they have growing revenue base, are still increasing year on year, which we observe very good representation and chart of the revenue itself. Strong pipeline with blockbuster potentials. So they have future potential for the market, and also have the TPIP has potential in pulmonary hypertension, so on. As for the weaknesses, we have a very dependent on a single product dependency. So nearly all the revenues comes from the area KC. If sales slowdowns face new competitions, so they are not profitable, as we observe from the negative form of net income. A very high risk on pipeline success, so it's heavily tied to the phase 3 results. So a failure or delay would hit the stock hard. So meaning that they cannot commercialize their product, which they aims to be that billion-dollar revenue if it's being approved. So if it's not, the revenue itself will be delayed, or the company will be in the form of not profits, again for a long time until finally the phase results is being passed and approved. So as we mentioned, the company net income is always bad, right? So from what we observe from the chart, the price of the companies keeps surging up. So we are trying to get a reason for this. But one of my expectation is that, one of my guess is that the negative net income is probably due to the fact that they need to put a lot of money into their R&D. So as mentioned, they have very high R&D spending. They have selling, general, and admin costs. So small revenue base versus cost. So they only earn a little from their drug selling of ARIA-KC, but compared to their expenses, which are putting into their R&D. So this is the reason why their net income is always in the negative form, and also have accumulation in terms of losses. So the stock price keeps surging is due to the fact that they don't buy, most of the fact is that the pipeline hype. So it's because of the future potentials, because they don't buy for today's profit, they buy for the potential multi-billion-dollar revenue from their brand Socoptip as well as TPIP potential. If it's being approved, that will become a very good generating for this company. So coming into the ratios, let us look at the profit margin. So the profit margin is terribly in a negative form. And let's look at the balance sheet. And in the balance sheet, we have the total current assets of 2008. As for their total current liabilities, 300. So it's significantly higher than their liabilities. So we have no worries about the debt situation of this company. For their net cash, it's also in a positive form. Very positive for a recent case. And inside the ratios, we have the debt to equity at level of 0.59, so it's quite reasonable. And also for the ROIE and ROIC in both are in negative form. Lastly, we'll be looking at the Insmed company's economic mode score. So over here we have the mode score of 4.4, so still currently it is sitting at a very weak and narrow mode. So overall, this company actually has a very reputable and good revenue, and also have a very huge future potential in terms of their drugs approval and so on and so forth. And in terms of that hype, the market actually has already reacted to that since the phase 3 has been approved. And so what I actually bought in this company is the fact that this company actually overstretched already. So I don't see any form of pullback. So this is one of the pullbacks. And however, right now, I just don't see any pullbacks over here. And if I were to buy over here, I would actually stuck at the top. So if I were to purchase, I will wait until it actually retraces back to the 150 or 200 EMA, just for a better and safer margin. So back to the fundamentals, right? One of the concerns is actually a very unpredictable and negative forms in terms of so the company does not make any money, it's not profitable in terms of their low net income and very bad free cash flow as well. So debt side is actually quite okay. The money, they have more cash than the debts. However, the ROE and ROIC just does not make any sense, as well as this company is not sitting at a very high quality company itself with a narrow and as well as weak mode. So would I actually invest in this company? Perhaps in the future, until I see the results of the potential and fully applicable sales in terms of the new future potentials. So right now it's just all about the hypes, and the hypes has already been reacted. It's already been reflected through the price actions of this company. So if you are interested in this company, you can do your due diligence and research before you make any money decisions. So as for me, I would right now just stay away, but I will keep an eye on it and to see whether or not if they really achieve what they talk about, which is the higher future potential, earning up to 1 billion for their revenue. So I guess that is all for today's video. I hope you gain different information from this, and I guess I'll see you guys in the next one. If you like to support me, click the thumbs up, share this video, and subscribe to the YouTube channel, and bye bye.